MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick. He's the senior editor for WeissRatings.com. Welcome back to the show, Sean.
Thanks very much for having me on.
How is oil doing right now, and is it something people should be watching?
Well, yes, if you follow the United States Oil ETF, symbol USO, it looks like it popped higher and actually broke its downtrend. And so many people will see this as bullish. And the volume isn't bad. It's not good, but it's not bad. So I think we'll see a lot of bulls pile in. I think that's a mistake. Just the really fundamental news coming out of Saudi Arabia and the U.S. Points to a short-term downturn in oil prices. This stuff here is actually kind of a reaction to the inventories, but I don't think it's going to actually be played out. So if I was thinking of taking a short position in either oil or in the stocks leveraged to oil, now would be a good time to actually do that. Now, that doesn't mean I think oil is going down longer term. I just think that we have too much supply on the market right now, so we'll have a short-term correction. And then, the people in OPEC will decide that they have to react to that and actually start to lower their production again. The interesting thing, one of the things that actually tips me off on that is that we know that higher oil prices have been supported by cuts in OPEC, led by Saudi Arabia, and also the small group of companies led by Russia. But while Saudi Arabia's oil exports are down year over year, month over month, they've been going up since the beginning of the year. Week over week. They've been going up since the beginning of the year. They've actually started to crank up their oil exports. And so this is one of the problems weighing on it. The other is that there's a whole other Saudi Arabia which has shown up, which is the U.S. I mean, since 2016, our oil production is up by like a fifth, and our oil exports are soaring. I'll have some great charts on this this afternoon on the Edelson Institute website. And so, like I said, I think we'll have a short-term pullback. This is kind of a head fake in the oil prices right now, so I think it'll pop up, but then it'll go lower because too many people will just pop in the wrong way. And it'll have to go down. It'll have to do some work. The longer-term fundamentals for oil are actually quite good, but this kind of thing, if you're a short-term trader, this is something you might want to look at.
And being springtime, we have all of refineries going down to retool to make summer gasoline, and they have to do their annual maintenance. We haven't had the annual fire or explosion yet, but wait for it. It's going to happen.
Well, hopefully they aren't planned. Now, we have seen U.S. Consumption of gasoline hit a new record again, and so there's definitely plenty being consumed, and that's basically because our economy is growing again. In fact, I think consumers are the most optimistic that they've been in like years. I recently saw that stat today. So things look good economy-wise. So there is demand, but the U.S. is now pumping so much oil, along with other countries around the world pumping more oil, that there's higher growth in supply than there is in demand. This is from OPEC's own numbers. And so that means at least for the next couple months, we'll probably see more supply come on than demand, and prices will go lower.
We'll have more with Sean Brodrick right after this.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're chatting with Sean Brodrick. Sean, what's going on with the cryptocurrencies, especially Bitcoin?
Well, they've been having a terrible time of it. I mean, actually, though, Bitcoin has been doing better than some other currencies, which I think tells us that within that universe, people look at Bitcoin as a store of value. Even though it's going down, it's not going down nearly as bad as like some of the other currencies. This will go on for a while. The problem is there's been incredible growth in the number of currencies. I mean, yes, we always hear, well, you can only have so many Bitcoin. That's only partly true. They can also split it, as like we've seen. But there have been more and more cryptocurrencies created, so there's kind of a flood of that on the market. Then you add regulatory fears, other problems that have been really in that space, and you can see why prices have gone down. That said, I think we're closer to a bottom than a top, because just like in, say, gold, we see cycles in the cryptocurrencies. And so the better ones should start to hit a bottom soon. They should start to go higher. And so if you haven't invested yet, and then you might want to look at that. By the way, Weiss Ratings publishes along with other things, it also publishes ratings on cryptocurrencies. And the ones I like are the ones with the higher ratings. I can be kind of prejudiced because I work there. But they have a good methodology for actually figuring out which ones are the good ones. And so you'll have to be selective. But like I said, I think we're coming to the next bottom in the good cryptos. And so that could be a good time to enter that space.
Is there fear in that space that there is going to be government regulation or governments outright banning them?
Yes, and that's an absolutely real fear. You know, I can see that problem. On the other hand, there were some like fears about regulation that did not come through. That's why we saw the price of Bitcoin go up by $1,000 recently. So, I mean, it is extremely volatile, but in something that's incredibly volatile, and I'm sure your listeners who actually trade precious metals can tell you this, when something's really volatile, you learn to buy the dips. And so we're having a heck of a dip in the cryptocurrencies right now. The good ones should find their bottom sooner rather than later. And yes, there actually will be regulation and stuff like that. But as long as there's a good underlying reason to invest in it, and that includes things like wider acceptance of the cryptocurrency you're looking at, ease of use, things like that. As long as it's becoming more and generally accepted and people see more value in it, then it probably will go higher.
Do you feel one of the things that might lead to restrictions on it is the amount of power needed to mine Bitcoin?
Well, certainly we've seen companies like China talk about restrictions on that. And there are places in both New York and I believe Washington State in the U.S. that have put some kind of restrictions on that as well. It depends on what kind of social value the local governments think they see in the actual Bitcoin mining. If they don't think they're actually getting anything out of it, then they might consider banning it. Yeah, that could be a risk.
Well, I've heard something like it consumes as much power as what Ireland uses annually to mine Bitcoin.
Yeah, well, you hear all these crazy stories about how much it uses, and of course it all depends on like how, well, you're right, the actual amount of raw power it consumes is a lot, but how expensive is that power? That's the question. In some parts of the country, power is actually very, very cheap. And so, say, northwestern United States, there's a lot of hydro projects. You can get some cheap electric grid energy. And so it isn't that expensive up there, and it's power that might go to waste otherwise. That's the argument they'll make, of course. I can see good reasons for people to ban it. I can see good reasons for people to invest in it. If it gets to the point where it's not profitable for people to mine for Bitcoin, what's going to happen? Then they'll stop mining for it. What's going to happen then? We'll have less supply, so the price will probably go up. That's just how our market works.
We'll have more with Sean Brodrick right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Sean Brodrick. Sean, what's happening in gold?
Well, a lot of interesting things are going on in gold. And one is, first of all, we saw Russia's gold reserves rise to 60.5 million ounces on March 1st, so that's up from the previous month. And we know Russian reserves have been rising month over month, right? So that's just showing that trend. The Russians like gold. But also total holdings in gold ETFs jumped the most yesterday since September. And it's now at 2,266 metric tons. That's the highest in almost 5 years. So the biggest one day jump since September, highest level in 5 years. Someone anticipates something out of the FOMC meeting, which is on Wednesday. And we have seen the price of gold sell off going into the meeting, and yet select gold miners, some of which I either own or I recommend to my subscribers, have actually been going up. That is a kind of disconnect you want to pay attention to. And what this tells me, and I can be proven wrong after the FOMC meeting on Wednesday. So if I'm proven wrong, fine. What this tells me is people think too much bearishness is being priced in, and they think the reaction after the FOMC announcement, or else maybe after the press release after it, because they'll have a presser afterwards where probably the head of the Fed is going to say, even though our statement was, kind of hawkish, we're not that hawkish. That's what I expect to happen. Anyway, so once that happens, I think people believe, or at least this seems to be the way the street is pricing it, that we're going to have a relief rally in gold. And certainly gold has been pushed down close to the 1,300 level. That's not a bad place for it to bounce anyway. So if you were planning on a bounce in gold and you think this is a time to get long it because you want to ride that cycle, now's not a bad time. And so that's maybe what we're seeing. That's why we're seeing money pour into the gold ETFs. That's why we're seeing select mining stocks, which are leveraged to the price of gold, go higher, even though the price of gold is going down itself and probably will into Wednesday. So this is an interesting thing to watch. This is a disconnect in the market, and often those disconnects can be very profitable.
Is lithium picking up?
Yes, and Cobalt especially. Oh my gosh, Cobalt's been on a tear. Now, lithium, it depends on what stock you look at, of course. Some are not doing well, but many of them are. And I should explain for those listeners of yours who don't know. A few weeks ago, some analysts at Morgan Stanley came out and said the price of lithium is going to head lower in a hurry. There'll be too much supply coming on, blah, blah, blah. That's what triggered the initial cascade lower for many lithium leveraged stocks. Not the price of lithium itself, which kind of went on a bumpy plateau, but those stocks leveraged to the price of lithium just went tumbling lower. Now, other reports have come out from other analysts saying we strongly disagree with Morgan Stanley. In fact, this supply-demand squeeze won't be handled anytime soon, and they're also saying that the guys at Morgan Stanley we're counting on supply from new projects which are questionable. That is, if they did come online, that might weigh on supply, but the chances of those projects coming on is actually lower than you might think. So for all those reasons and more, bullishness is starting to creep back into this market. And so you can look at a good, strong name like SQM, for example. I mean, it has been beaten down a lot. And yet we know that its production is going to quadruple over the next few years. So if you're looking at something to buy now, my subscribers bought it. But, I mean, if you're looking for something to buy, that seems like something that you might want to look at. So I think there is reason for optimism in that space. Cobalt even more so. The deals we're seeing being done right now shows that companies around the world are starting to position themselves for a big land grab to grab cobalt supply for the electric vehicles they plan to build in the future. And so cobalt looks very promising, and definitely people should be looking at that space.
Well, where's all that power going to come from with all these electric cars? Will it come from atomic power plants using uranium?
Well, certainly in China they are building more nuclear power plants. Japan just turned on again its 6th reactor. India's building a whole bunch of new French-designed nuclear power plants. And there was something interesting that happened in the space, which is Energy Secretary Perry in the U.S. said that the U.S. would stop selling its uranium surplus into the market this year. And so that in itself should take weight off the price of uranium and also add some fire underneath those stocks which are leveraged to uranium. So there are things happening. We're seeing what looks like will be increasing demand, what looks like there could be some more supply coming off. And so that is an area that I think has a lot of promise. But yeah, look that up, because Perry told the Senate Energy Committee that he will suspend sales of excess government uranium onto the market for the rest of the fiscal year. And that, along with many other things that have happened in the past few months, are really game changers for a market that's been beaten flat with a shovel. There is no optimism in uranium right now. And so if you're a value investor, that's exactly where you want to look. I think that there are some tremendous names that one could look at in the uranium space.
There's word from the Washington Post that President Trump might impose $60 billion worth of tariffs on Chinese goods. Is that a concern?
Yeah, well, that is a real thing. I mean, I was telling my subscribers about this last week, so it's not news to me, but I guess it's just been confirmed. This is this is a big deal. And there are winners and losers out of this. Certainly Chinese companies that were importing stuff, but another loser, which many people may not be considering, is Walmart. Walmart sells a lot of cheap stuff made in China, right? And so if the tariffs are going up, that means they have to pass on those higher prices to their customers, or they have to eat it. And if they try and pass along those prices, their customers may decide to buy somewhere else. So I would count Walmart as one of the losers in that one. In the winners, we don't that kind of manufacturing really moved offshore. There probably isn't a lot here in the U.S. There could be some, but there could be other winners in the U.S. It just takes more time for those to actually work out. So we'll have to see how it goes. Maybe it'll save some U.S. jobs. I mean, I'm not against using tariffs in a smart way. Blanket tariffs tend not to be using them smartly, but again, you don't want to say, well, this is no good immediately. Let's see how they actually enforce those tariffs, what they're actually doing, because there could be some good stuff there.
Does the U.S. plan to issue more debt?
Oh, yeah. Yes. We're going to run a deficit of $1 trillion this year. The thing is, we're issuing more debt at the time that our major customer, China, is buying less debt. And here's the funny thing. Do you think China might hold a grudge because we're slapping tariffs on them? I think they might. And so what happens then? That actually could be a real witch's brew of like politics and tariffs that all intersects in this place, and we'll actually have to see what happens there. I mean, you can see why the market had a big sell-off on Monday if news of those tariffs were being confirmed, if other things, because Washington seems to be just a big grab bag of bad news lately. So if all other things are going on, there could be geopolitical forces which weigh on this market quite a lot. That said, there are plenty of things that the market has going for it, right? It has rising earnings, and earnings which are getting stronger, by the way. It has tax cuts here, at least here in the U.S. It has lower regulation. It has a bunch of things that could move stocks higher as well. So what's this point to? I mean, we have some things that are bad, some things that are good. It means increased volatility going forward. If you are an optimist and you think things are going to go higher, then you'd want to use those pullbacks in select stocks to add to positions and go up. If you're a pessimist, then you want to use those rallies as a chance to take more bearish positions. I can't make up people's mind for them. I know how I feel, and I've been talking to my subscribers about it. I have a new issue of my monthly newsletter, Wealth Supercycle, going out later this week. So there's a lot of things you can do, and certainly it's an exciting time in the market. The thing is, investors got they really got pampered and just hooked on the fact that the market was always going to go up. Well, that's just not the truth, right? I mean, at some point, we have to see more volatility come in. We have ups and downs. We get back to a period where not all stocks go up. Some actually go down. And in that kind of environment, you have to be more of a stock picker. And so do your research, and that's exactly what you should be doing.
Sean, thank you so much for chatting with us.
Thank you very much. I've enjoyed it a lot.
My guest has been Sean Brodrick, Senior Editor for WeissRatings.com. You're listening to HowStreet.com Radio. Find us on Twitter at HowStreet. Our popular YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.